Hey everyone, welcome back to Earnings Call. My name is Jeffrey Beamer and I am the Senior Investment Strategist over at ewotrader.com. And if you've been with us for a while, you know what we do here. We talk about stocks or companies that are declaring earnings, but we just don't talk about the earnings and the boring stuff like the financials. We talk about how to make money off of these earnings announcements, okay? So this week marks the beginning of Q4 earnings. This is always led by the banks. Okay, each earnings cycle is led off with the major banks. So we're talking JPMorgan, Goldman Sachs, Morgan Stanley, State Street, Citigroup, Wells Fargo. Yes, all the big banks are declaring. Well, most of the big banks, most of the major banks are declaring this week. And so we're going to talk about it and we're going to talk about how to make money from it. So we are also going to talk about last week's trade. And as you know, we talk about a new trade each and every week right here. So let's get going. We do talk about a lot of stocks each week, so be sure to use the chapter feature at the bottom of the video if there's a particular name that you want to jump to. But we talk about stocks in relation to what the option market makers are estimating the move to be. Okay, this is also combined with the historical movement of these stocks around earnings, and they're broken up into two categories. Okay, breakout stocks on the left, these are stocks that move double digits on average, 10% or more on average. And then on the right hand side of the ledger, we have quiet stocks. These are stocks that move single digits, sometimes as low as 2, 3, 4%. Okay. And what's notable about that is this week, you'll see we are full of not only these quiet movers, but also most of them, all of them are banks. Okay. Most all of them are banks. There's a few exceptions here. So we talk about how to make money. So how do we make money from these? There's three basic strategies that we use. For the breakout stocks, we use straddles and strangles. And for the quiet stocks, we use something called an iron condor. Okay, we like to sell premium. We like with an iron condor, this is a credit. This is done at a credit. We like to increase our odds of success by selling premium going into that earnings announcement. Okay, so let's get to an example here real quick. We're going to start with the quiet stocks. And a good example that I like to use is Pfizer. Now, Pfizer does not have earnings this week. They don't declare until February. All right. But look at the chart here. It's just very quiet. I have the earnings announcements highlighted with the ellipse, and the stock just does not move. It might gap a little bit, but maybe only 1% or 2% through the earnings announcement. But overall, it's very quiet. This is a classic example of what we call a quiet stock. So if we get to our list for this week, I'm isolating the quiet stocks here. You'll notice it's full of banks. All right. So let's talk about them. Let's jump to the chart here real quick, and we'll begin with Bank of New York Mellon. All right. Bank of New York Mellon is going to declare earnings tomorrow, Tuesday, January 13th, before market open. Now, it's important to note, boy, right off my memory, I think everything this week has earnings in the morning. Everything that we cover is, which is not an exhaustive list, by the way. Okay, the list that I showed you there a moment ago, this is not an exhaustive list of every stock that has earnings. This is the best candidates for the strategies that we trade. Okay, the best of both breakout and quiet. All right. So here we have Bank of New York Mellon, and look at that trend. I mean, this stock consolidated back in October at about $105, and then now it's trading right around 120. Well, I'm not really concerned with that overall trend. I'm just concerned with the move through the earnings announcement and the average move, and also what the option market makers are pricing in is about a 4% move going into earnings. Okay. So that is where we would look to maybe sell an iron condor. We would want our break evens, if possible, about over, let's say, as an example, over 5% away from the money, 5% above and 5% below, because the stock moves about 4%, and we don't want it to move because we're selling that premium. Okay. So tomorrow morning, Bank of New York Mellon kicks us off, but also tomorrow we have JPMorgan. Okay. The biggest, baddest one of them all. All right. They will declare tomorrow morning, Tuesday, January 13th, before market open. And look at that, another 4% mover. That's going to be a theme this week. Lots of stocks that move on average around 4%. Now, you'll see a lot of red here with all these banks today. And that's really because of commentary, news event that came out. But that's really not going to impact us through the earnings announcement. All right. The numbers are already in, and whether they meet or miss, that's what's going to affect the stock and not really the news of the day. Okay. So moving on through the list, we have Bank of America. You can see they're down a little worse today, down 1.8%. But once again, I'm not really concerned about that. I'm concerned about what it's going to do for its earnings announcement. Now, Bank of America will declare on Wednesday, January 14th, okay, before market open. And the average move here is also 4%. All right. Pretty consistent here with these movers, with these financials. They all move around 4%. Sometimes some a little bit more. We'll get to Citi here, and look at that, 5% for Citigroup. All right. So they will declare Wednesday, January 14th, before market open. The average move here is 5%. So Citi does tend to move a little bit more, but not much. It's a quiet stock, not one of these big breakouts that moves 20 or 30% through the earnings event. 20 or 30%, you say? Yes, there are stocks that move on average around 20 to 30% through earnings. We'll eventually get to some of those. There's none this week, but there are a few double-digit stock movers, and we'll talk about those in a minute. Moving on through our list, we have Wells Fargo. They will declare Wednesday, January 14th, before market open. Now, the average move here is 6%. Okay, so you see the numbers kind of going up a little bit, but Wells Fargo is still considered a quiet mover because it doesn't move double digits. Okay, on average, it moves pretty quietly. All right. Now, an outlier here is Taiwan Semiconductor. Now, with a name like that, being Semiconductor, you might think that this is a mover, but it's not. This particular semiconductor is always pretty quiet, at least at this stage of the company's lifespan. Okay. The average move here is 4%. Now, TSM, Taiwan Semiconductor, will declare on Thursday, January 15th, before market open. Okay. See the theme here? Before market open on all these. Average move 4%. If you go back, you can see, look at this, a little bit of volatility during the day, but the stock, closed in relation to the previous day, pretty darn quiet. The previous earnings, same thing. It gapped up a little bit on the earnings, but even the next day, it closed down more towards, this quiet range that the stock had. Okay. So again, we're just concerned with the earnings announcement and not necessarily an overall trend for the stock. Okay. Now, one company that did not make our list this week was BlackRock. And the only reason is because of all the other candidates that have maybe better opportunity. This is $1,000 stock. So what happens here is usually the options are $10. The strikes are in $10 increments. Okay. So usually selling a spread would make your margin, make your risk over $1,000 minus your credit. Where on something else like JPMorgan or Bank of America, where you can narrow down those spreads to maybe $5 wide. All right, $5 wide, your max risk is $5 minus your credit. So if your credit's $1, then your max risk is going to be $4. $4 versus $900 is a big wide. That's a big difference, and so that's why BlackRock didn't make our list. But still, they're just a 5% mover. And they're a big financial company. So you'll want to watch these earnings. They will have earnings on Thursday, January 15th, before market open. Okay, early in the morning. Expected move here is about 5% for BlackRock. All right. Now, we're going to keep the trend going. Morgan Stanley, this has been just a very strong stock overall. And you might expect that their earnings are going to definitely move the stock. Well, historically, it doesn't. Option market makers are pricing in about the same number, which is 4%. Okay. Morgan Stanley will have earnings Thursday, January 15th before market open. And the average move here is about 4%. So this is a $185 stock. They're going to have strikes maybe every $2.50 increments. If not, then every $5. Great for our strategy of selling premium with an Iron Condor. Okay. Keeps our risk under $500. The availability to do that is greater. Okay. You can widen it if you have more capital and want to have a bigger risk and odds of success are increased. You can do that, but I like to keep it around that $500 number. All right. Now, one of the big boys here, Goldman Sachs, they're going to declare Thursday morning, January 15th, before market open. Goldman Sachs, again, another financial that the financials have been really strong here going into the beginning of 2026. The average move here, though, is about 4%. All right. And this is a $900 stock. All right. So you can see that this year, since September of last year, this stock has gone from being about a $700 stock, $725 to now $940. That's very, very nice move for Goldman. And the rest of financials, most all of them are doing the same thing. Okay. So once again, quiet stocks, that's the estimate. That's the average. They're matching up here. So a good candidate for an Iron Condor if you can get your break evens again further than say 5 or 6% away from the current price of the stock. That's where you have the odds of success in your favor. All right, moving on through the week. Now we get to Friday morning. All right, Friday morning we have M&T Bank, more of a mid-sized bank here, but they will announce Friday morning, January 16th before market open. And the average move here is a whopping 3%. Okay. Just a quiet mover through their earnings announcement. Doesn't really change the trend much, but this is a nice $200 stock. And you can see there is a little volatility, but again, not much through the earnings announcement. Okay. A little volatility here, but it's not moving 5%. It's not moving 8%. It's not moving 10%. It on average about 3%. Okay. Another quiet stock is PNC. This is a financial services group. PNC will declare Friday morning, January 16th before market open. And the average move here is 4%. All right. And again, another $200 stock. And you can see all the financials have been doing really, really well here through the beginning of the year. All right. The last stock that we're going to look at on the quiet side is State Street. Okay. Another big bank. They will declare Friday morning, January 16th before market open. And the average move here is 6%. So that's really the high end of the banks is that kind of move of 6%. And this is a $130 stock. Love stocks priced in this $100, $200, maybe even $300 range for selling premium because you can go away from the money and still get premium in your options. All right. And that gives you that nicer credit that makes it worth your while to trade. Okay. So with this, that is our quiet stocks for the week. But quite honestly, everyone really likes looking at the breakout stocks. Okay. I only have a few candidates for you this week, but again, this is the beginning of the next earnings cycle. So here's an example of a breakout stock. Okay. This is Akamai. Now, Akamai does not have earnings this week. Okay. Let me be clear. This stock will have its next earnings announcement also in February towards the beginning of the month. We'll get to it, when it has earnings, but I like to show it as an example because this stock moves through earnings, double-digit numbers through each and every earnings announcement. It does it with regularity. Option market makers often price in these double-digit moves, but sometimes they get it wrong, and that gives us an opportunity for our trades to work out. And the type of strategy that we use for these, believe it or not, is a straddle or strangle. And yes, volatility on the options does go up heading into these earnings announcement. And yes, we are buying the more expensive options, okay, because implied volatility has already gone up. But because of the strategy, straddles and strangles, when the stock moves, all of a sudden one side of our trade often goes in the money, and that's where IV just doesn't come into play, okay? Because it has real value, it has intrinsic value. All right, whether it's the call to the upside or the put to the bottom side. So straddles and strangles are what we like to do with these big stocks. All right, so let's get to the list here. And take a look. Now, notice it's pretty quiet. There's only 3 companies that meet our criteria for this week: Delta, Concentrix, and Insteel. So let's talk about these. Everyone's familiar with Delta. All right, so let's go. Let's take a look at the chart here, and I'll show you an example of a stock that typically does move double digits through their earnings announcement. So Delta will declare Tuesday, January 13th, before market open. And believe it or not, Delta Airlines has an average move of 13% through their earnings announcement. All right. So sometimes it'll move 9%. Other times it'll move 18%. Okay. Other times it'll move 12%. Sometimes it'll move 16%. It just varies. All right. And the average is around 13. And right now they're pricing in a move. Well, they're pricing in a move of about 8% right now. So that kind of puts us at an advantage. There's good news and bad news there. The bad news is option market makers are smartest guys in the room. And when they're pricing a stock like at 8 for an 8% move, sometimes it does move only those single digits, but the average says differently. And so that's where we look for our edge in one of these trades. All right. So Delta will declare tomorrow morning, Tuesday, January 13th, before market open. A stock that you may not be familiar with is Concentrix. They will declare Tuesday, January 13th, before market open. And the average move here is 14%. Okay, that is the average move. And you can see the last time they had earnings back here, look at this big gap down. This stock actually, look at this, it opened way down here at 43. It closed the day before up here around $55, opened the next morning at $43. Okay, a 13% move down. It did rally up during the day, finally settling at 47.77. That was a 13% move on that stock. All right. And if you go back through the history, you can see the stock does gap around through these earnings announcements. Even without earnings, sometimes the stock moves. Okay. But look at this volatility through earnings. Look at that. Look at that move there. Look at this big move. It started the day before back here in March of 2025. It started the day at 45.61, closed the next day at 65.08 because of an earnings announcement. That is a big double-digit mover. That's why we love doing these trades. If we can get the odds in our favor, okay? It's all about the pricing of the options. So they will declare tomorrow morning, average move there is 14%. Okay, and then our final one for this week is a company called Insteel. IIIN is the symbol. Yes, 3 I's in a row and then an N as in November. They will have earnings on Thursday of this week, January 15th, before market open. Again, all these stocks declaring earnings before market open. Average move here is 12%. And look at the drop. The last earnings announcement, the closed the day before at 36.35. The next morning they had earnings announcement. The stock on the open gap down, and then boom, bottom fell out. Closed the next day at 29. Around 29.36 is where it closed. Okay, that's a big move. 36.35 one day, the next day you're at 29.36. That's a big move for a $35 stock. All right, or for a $36 stock. They will have earnings Thursday. Looking for a 12% move on this particular stock. Can it move more? Yes. Can it move less? Yes. That's the excitement. All right. And that's where we like to put odds on our side. All right. So let's take a look at our whole list one more time. And just remember, let me re-emphasize that this is not an extensive list of all the companies. In fact, this week, there are, what was the number? There were 58 companies declaring earnings, and we're only looking at 22 of them. Okay. Uh, so we isolate down to the best ones for our strategies. These aren't our strategies. These are common option strategies, but these are the ones that we use through these earnings events to take advantage of moves or companies that don't have a move. Okay. All right. So that's the list one more time. And as you know, each and every week we talk about a particular stock and we highlight a particular stock and the strategy that we would do on that stock through the earnings announcement. So what did we do last week? Well, we took Applied Materials. That was our featured stock for the week. And we initiated a straddle on this. And we do this through a publication called Delta Neutral Breakout over at ewotrader.com. All right. And we look for the stock to break out or have a pretty violent move after the earnings announcement. Okay. So this particular straddle costs us just over $5, which is $500. Okay. About $5.40 was the debit. So appropriate for accounts really from $10,000 and above. Okay. You have an account as low as $10,000, maybe even $5,000. It would be a little risky for a $5,000 account, but definitely $10,000 or more. So we put this on before the earnings. So what happened? Well, Applied Digital had their earnings announcement on Wednesday. The stock did move a little bit, but then we sat on it and we're looking for that big move that Applied Digital typically does after earnings, and we got it. Okay. So if you look at the results here, we took this trade off this morning. Just this morning, we sent out an alert to our subscribers saying it's time to exit Applied Digital. All right. And you can see that this stock has gapped up. It gapped up about 8% after the earnings announcement, which was not enough to profit on the trade, but we sat on it. The next day, it was up 15%. And now today, it is up about 3.5% when this snapshot was taken. So 15% yesterday, another 3.5% today. And that generated a great profit for us, an 80% return on risk in just 7 days, an 80% return on your money in just 7 days. That was a profit of $436. All right, which on a portfolio of $10,000 is 4.36% return in 1 week. A 4.36% return in just 1 week. That's a pretty good return on portfolio. All right. And if you can do that consistently, yes, you're going to have some losers, but keep those losers small. You get numbers like these on a consistent basis. And, we showed what we did for the year last year. We did that last week. We had a year-end recap. And I showed the numbers. If you didn't see that, jump over to last week's video and take a look, and you'll see the numbers that we did for the year last year. And so this is we're off to a good start this year in 2026. So yes, I do have another candidate for you this week, and we're going to stick to, believe it or not, with so few breakout stocks and all the banks, I chose one of the breakout stocks. All right. So what are we going to do? We're going to do a trade on Delta Airlines. All right. DAL is a symbol here. And Delta gapped down a little bit this morning, down 2%, 2.7% in midday trade. So this trade is around the $70 level. You could do a $70 strike. You could use a $71 strike. You could use a $72 strike. But we're doing a straddle right around there. If you want to do a strangle and make the trade less expensive, you could say, with the stock currently trading at 70.36, you could buy the 70 put and the 71 call. Yes, that is a strangle. Two different strikes, same expiration date. Okay. But we did the straddle. Okay. And we're doing that. The debit here is right around that $500 mark. Okay. It's about $540 as well. All right. And we're looking for, all we need is that average move. If we make it that 13% move through the earnings announcement, we're going to have a nice little profit to talk about next week. All right. So Delta will have earnings tomorrow morning. We'll know pretty quick definitely, close out the trade before Friday, most likely, and then we'll see how the stock does on our show next week. So as we wrap up this week, just remember to keep learning, keep trading. Education is your best asset, and be consistent in your trading, and you will have success in these endeavors. So everyone have a great trading week. I will talk to you again. Now, markets are closed next Monday. Monday's a market holiday, so join us Tuesday. Tuesday we will be having our earnings call on a rare Tuesday edition. So enjoy the 3-day holiday weekend this upcoming week, and I'll see you Tuesday next week. Everyone have a great day, and I will talk to you then.